Hey, this is Matt from InvestiQuant. Today is Wednesday, May 19, 2021. This morning, we saw sizable down gaps in the market, and after trying to go lower a couple times, the market has found aggressive buyers, and we are heading higher. We have not made it back to yesterday's range yet. We have not closed the gap, but we are trading near the highs of the session and trying to make it that way. So let's take a look and discover at what that type of pattern has led to historically. I've got all four instruments selected here, and we're going to look at an entry time of 3 p.m. Eastern time, set up as a long, and it'll exit at the close, which is 4:15 p.m. Eastern time. Now, this morning, we gapped down below the prior day low. I'm going to hit equals here in the opening area category next to open below prior day low and add that to this test that we're about to run. Next, I'm going to go into the post-open filters, and I'm going to say that we have not made it back to yesterday's closing price. So that is an opening gap that has not filled. I'm going to hit equals here next to gap not filled. However, we are trading above the open and trying to work that way, so I'm going to add that here as well by going into the intraday close versus intraday range and say that the close is above the open. And the close is referencing where is the price at the time of entry, which I've got set to 3 p.m. So this is going to assume that at 3 p.m. we are trading above the opening print for the day. Lastly, I'm going to put it in a similar market environment. We are below a 10, but above a 200-day simple moving average, and now I can click View Results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time, when you open below the prior session low of day, and then at 3 p.m., you have not traded back to the prior day closing price, but you are trading above the open. So you have a green daily candlestick forming, but it is still down relative to yesterday's closing price. This is taking place below a 10, but above a 200-day simple moving average. Historically, we've seen this pattern take place 28 times dating back to 2003 in the S&P. It's got 26 samples in the NASDAQ, 33 in the Dow, 26 in the Russell, and the win rates on these are very mixed at neutral readings. So ES coming in dead even, 50-50. The NASDAQ, 46% of these have closed above that 3 p.m. price. The Dow, 55%. And the Russell, 46%. So very neutral readings there on the win rates for this pattern. If we look at the average win and average loss, the average win has been larger in the S&P. It's very similar in size for the NASDAQ and the Russell. And then the Dow has seen larger average losses historically. But we've got very mixed numbers here on this pattern. I looked at a couple different variations of it, and I saw more of the same where the patterns were showing very mixed readings heading into the closed here, to where there was not a strong bias in any of the things that I was looking at when I was running this study ahead of time. So hopefully you found that helpful. Good luck today. We'll see you next time.